And it is the last day of Q3, 9/30/2019. Markets are trying to end on a high note here, guys. Welcome out to Tackle Trading's halftime report. We got
Tim, it's the last Q3 of the decade.
Is that right?
Think about that. Yeah, we're about to end the decade.
Hey, listen, time is a construct. None of it really means anything. It's a 24-hour-a-day market.
It's a circle, right? It's a circle, right?
Oh, say
time is a flat circle.
That's right.
Tim, what is your favorite cliched saying? Is it time is a flat circle?
Favorite cliched saying, it is
No,
what
it's c'est la
it is.
vie.
No, I like it is what it is.
No, that's even worse.
Yeah. Because that really bothers people. Like people who hate it is what it is really hate it is what it is.
It is what it is and c'est la vie are pretty much the same phrase. Because c'est la vie translates to that's life. It is what it is. Yep. It's like that's the same phrase.
Yeah.
Well, I'll tell you this. I mean, one of the most annoying phrases I've ever read probably is going to be U.S.-China trade war. It's in the headline every single day. It's all we can ever talk about these days. So that's going to become a cliche in the markets, Matt. Tell me if you've heard this before. Mm-hmm. U.S. and China are not playing ball together right now. Trying to delist some companies.
I thought we had this deal done 2 weeks ago. What are you talking about?
No.
Once we were told that they were playing, kind with one another and being friends with one another, I thought that deal was done.
No, not a done deal. I mean,
you're telling me from a Friday to a Monday we had some Chinese news?
Yeah, shocker.
Okay, Cody, what was the news that came out on Friday? Let's just get everybody up to speed on.
All right, so on Friday there were some offhanded comments by our president, by President Donald Trump, that he wanted to delist Chinese companies from the U.S. stock market. And from that, you had a bunch of Chinese companies just start taking a huge hit, because if we immediately delist them from the U.S. stock exchange, then we're going to have plenty of liquidity issues and money being lost rapidly. Over the weekend, you had people in his administration, more sane-minded, come through and say, okay, we're not just going to delist companies offhandedly from...
We're not just going to delist Baba?
Yeah, we're exactly. Baba took a huge hit on Friday from that. It's like, okay, are there negotiations going on, U.S. and China? Yes. It's like, but if we're going to delist Chinese companies, it's not just going to be because I said so. It's, if that were to happen, there would have to be reason behind it. There'd have to be a process of getting it done. And all of that came down to the advisors came in. They're like, no, that's not likely to happen. Now we're seeing a bounce back from the giant sell-off we had on Friday.
Well, Matt, bring up Baba and Baidu. I mean, two biggest names I think of when I think of technology in China. You can see the volatility in some of these companies. Baba gapped down and ran on Friday on the news. Now it's backfilling a little bit, but that's an ugly chart. Whenever you have this kind of news, it can disrupt technical analysis. There's no question about it. The news can take precedence. What's your read on that, Baba?
I mean, that's the big. You take the Baba trade from a couple weeks ago, Tim. Something that we were looking at here with the breakout of 180 with the ascending triangle situation. This is a pure technical pattern. This is a technical pattern that is taught in textbooks from a technical perspective. That ascending triangle breakout, that is one of the most popular continuation patterns in the marketplace. And that's the problem with trading, short term in this type of marketplace where it's really news driven, and where it's really news driven just based on people within the same administration. That's the frustrating part. It's not just China and the US throwing jabs at one another. It's Trump coming out on Friday and saying we're going to perhaps delist some Chinese listed companies, which is really insane when you think about it, guys. How much Chinese money is there in US stocks right now?
Oh, tons.
Trillions of dollars.
And
billions upon billions upon billions upon billions upon billions. And all of a sudden we're just off the cuff going to talk about delisting Chinese Baba and Baidu and these massive mega cap companies. I mean, it's really insane to think about it. And it's not even China coming back and saying, well, no, tit for tat. No, it's the administration's own individual saying, oh no, we're kind of kidding on that. That's very frustrating from a trader's perspective. That's extremely frustrating.
The other thing that's also frustrating is the fact that I think the news headlines and the credit and things that we think the executive can do more than they can actually do. The president actually delist companies from the New York Stock Exchange. No, he couldn't. But when people hear the president say something like that, they assume that it's just that easy.
Well,
like,
they also assume the president has much more to do with the national economy than they really do. It's just
true.
people assume that all the time. But just because that's in the mind out there now, I mean, what would it take? I want to ask Tim and Mark and Cody, I want to get you guys' take on this. What would it take for you to be even interested in trading a stock like Baidu, which is a very, very popular stock to trade, or a stock like BABA, which is an extremely popular stock to trade?
Trade war sensitive stocks right now kind of they get the red flag from me personally, just because there's easier money in the market, Matt. I would much rather trade the consumer staples sector bullish. I'd much rather trade different products in different ways for cash flow. I'm kind of avoiding trade sensitive companies, so it would need a lot more,
especially Chinese companies.
Not just Chinese companies, though. I mean, like a Las Vegas Sands, for example, or a Wynn Casino, or somebody who does business in China. I mean, the trade war stuff, unless you're trading volatility, unless you're trading earnings, it's a stay away until further notice for me.
Well, and quite frankly, Tim, every one of those stocks you just listed, Las Vegas Sands, it has not had a consistent trend in a very long time.
Yeah.
Wynn Resorts has not had a consistent trend in a very, very long time. You take Baidu. Baidu's been stuck in a range for, 6-7 months now. You look at BABA, BABA's chart kind of reminds me of trying to trade Tesla's chart. And so, but, Tesla had a very, very good shorting trend all throughout 2019. It's only been like the last 3-4 months that it's really kind of stabilized. So yeah, it's those stocks particularly are very difficult swing trading stocks. Would you agree?
Yeah, for sure. Mark, what about you? Are you staying away from trade war companies? You staying away from Chinese companies?
Damn, that's some old news. I've been doing that for a year now.
Yeah, he's been saying that forever.
Literally, have you not heard me rant on this? Listen, why are you messing with the trade war? You can't trust it. You can't trust moves. It's too sensitive. The parties are unpredictable. You cannot predict when China or Trump are going to whimsically, off the cuff, or strategically make a move. So, yeah.
You know what sector has zero international impact? Maybe not zero, but very, very, very limited. What sector?
Utilities.
It's utilities.
Yeah.
Look at that trend.
Yep. Utilities. It's been consistently up. It's been the safe play.
Yeah.
Hey, real quick, just because I thought about this, and it's kind of a metaphor. I was just thinking, right now, trading things like BABA, or like those times that you go out drinking and you have a very fun time. You're like, this is great, fantastic, and then you wake up the next morning and you're like, I'm never doing this again. And then a couple months later, you see a breakout on BABA like you did last week, and you take it, and then you get slapped in the face and you say, I'm never doing this again.
Oh,
that's why you just always. That's Cody. You're such a young man. That's why you just. That's why you don't stop ever drinking. You just keep drinking and keep drinking and keep drinking. That way, there's never those moments in time.
A hangover is tomorrow.
No, it's just one continual drink. That's There's a lesson for you today.
Says the man on the couch.
I want to get you guys' take on something else in the news, though. What is the implication of this whistleblower testifying to Congress potentially, the whole Trump impeachment, inquiry, and all those kind of things? Do you see real market risk from this right now, Matt?
I personally do not, because I don't, and I think this is the market's response to this as well. It's going to be in the news cycle. It's going to be annoying. It's all give out. It's going to be frustrating for everybody. But I don't believe anybody believes he's actually going to be impeached.
Yeah.
The Senate is not going to.
Well, no, we got to be. He very well could be impeached. No, but he's not going to get removed from office.
Yeah, let me rephrase. He very well could be impeached, but guys, impeachment is like grand jury testimony.
All right, here, listen. It's been a while. I did my PhD work in political science.
You got him going.
I haven't been able to do a political science class. Let me do political science 101 here for you. There is a process to removing a president. Never's been done to success. We've had 2 presidents impeached, Bill Clinton and, what was his name in the 19th century? Somebody look that up.
Johnson.
Yeah. But neither one were removed from the Senate. There's a 2-pronged process if you're unfamiliar. The House votes to impeach. Kind of think of that as the grand jury.
Mm-hmm.
It doesn't remove a president from
Andrew
office.
Johnson was the other one.
Just like President Clinton was impeached But once they're impeached in the House, it then goes over to the Senate for what you would think of as a trial. And if the Senate votes to remove, they need 2/3 of the senators. When have we got 2/3 of the senators to agree on anything?
Mark, you're not
67 votes.
You need 67 votes to impeach, and the Democrats have what, 46 right now?
Yeah. So even if every Democrat, you would still need like 20 Republican senators to remove Trump from office. So the market, like Matt was saying, Matt doesn't see a whole lot of risk. Like the market doesn't see a whole lot of risk, because the odds of 20 Republican senators,
it is never happening.
Like, listen, and we don't want to get into politics.
You have blue dog Democrats, Mark, that are in conservative districts that are not going to impeach. They're not going to do it.
Like, whether you think it's removal of office or not, I mean, listen, this is a very, very volatile issue. That, listen, we believe in the color of money at Tackle Trading in our community.
Yeah, we're not
some of us are Republican, like just within the brothers. You know, I'm a Republican. Tim's a liberal, socialist, communist jerk.
Ratfig, Pinko, progressive, bleeding heart, liberal. Yeah, sure.
Lip-tart.
I will ask you guys this, because I did have a thought.
It's most likely not going to happen. That's why the market doesn't see a whole lot of risk.
How does this news, because obviously the market doesn't seem to be affected by the impeachment talks directly, how do these talks affect Trump-China trade deal? Because if they think that he might be affected, does that affect the trade deal at all?
China wouldn't care. You
don't think China cares one iota?
No, they're going to wait a year. Regardless of impeachment or election, China's not going to do anything until post-election.
I think the biggest risk from the impeachment process, though, is what Cody's bringing up. It's the volatility that Trump could bring to the situation. Is his reaction going to be to escalate the trade war, to do something else? That's probably where the impeachment process has risk for markets, Mark. And yeah, we do.
Only if he's completely lost his mind.
Well, listen, but there's the whole wag the dog scenario. There's the old political adage that like when there's real turmoil, hey, let's do something else, start a war, do something else to get the headlines off that. Mm-hmm. Like, who knows? I have zero idea.
I think with the volatility, I think the most likely scenario would be a response for something positive. Yeah. Something positive he could go back. So I don't know. Those are hypotheticals we could talk about all day long. The simple reality is, coming back to the original question though, Tim, does the impeachment process itself have an impact on the market? And the answer is not yet, because the market, much like what we just talked about in the last 3-4 minutes, nobody expects this process to actually be played out.
The market cares 1,000 times more about the trade war than it does the political.
Fundamentally agreed. 100%.
Well, and the markets are up here today. There's no doubt about it. As I look at the charts on the S&P, the NASDAQ, the Russell,
Tim, real quick.
Dow.
Real quick. Mm-hmm. When was the impeachment of Bill Clinton?
Market went down on that, actually. It was the exact date. I think it went down like 6%. Yeah. Impeachment date of Bill Clinton.
You got to go back more than 20 years.
October 8th, 1998, Matt.
1998. Mm-hmm. Okay, so that was when the Senate.
Yep.
Okay, so the Senate in October. So they were running impeachment inquiries before then, right? For at least a year.
Through the summer.
Through the year. So and that was 98, correct?
Yep.
Okay. So through that impeachment process, the inquiries, the investigations, and if you guys remember the laughable, dress and all that stuff, right? So it kind of ran up into that, got overextended, came back down a little bit in the summer and the fall of 98, recovered for another extension in the marketplace. Even if it came down 5-6 points, that's not that much volatility. Mm-hmm. I mean, the market came down, just in this market right here, came down 20% when the Chinese trade war really kind of started, spitting fire last year. So I'll tell you, I'm not concerned about it yet. Are you guys?
No, I'm not really concerned about it.
Not from a market perspective.
From a political perspective, that's a different discussion.
That's a whole different,
but from a market perspective, no, the market's not focused on it.
Hey, listen, Thanksgiving dinner around the country with families that are divided on politics could get really interesting this year.
That is why I do love our family, though, because our family does have vast differences of opinions when it comes to politics. and yet we always talk about politics and we always hug it out and love each other
yeah,
out.
we don't throw fist unless it comes to football.
Oh, it's football. Yeah, it's football.
Like politics, we can talk about to the end of the day. Football though will get fist fights going.
Oh yeah.
So
BYU Utah discussions will kind of end bloody
they can
sometimes.
get heated. They can definitely get heated. You know, Matt, as I look across the major
I
markets,
would just remember that once I told our nephew, we have a nephew that's a huge Green Bay Packer fan, and I had the audacity once to tell him that Aaron Rodgers was overrated.
Oh Lord,
he wanted to kill me.
Blood in the eyes.
He wanted to kill me.
Mark is an instigator. There's no doubt about it. Let's look at the indexes, boys. Give me a quick flash through all of them, Matt. Dow, S&P, NASDAQ, and then the Russell. The Russell's got a deeper retracement. Obviously, neutral and cash flow is pretty good here. Tell me if you're seeing anything in those.
Yeah, let's take a quick read at the technical conditions of the indexes very quickly, Tim. Market selling off last week, coming into that support level right there. We've talked about it multiple different times right there around 29.50. You got the old resistance, 29.50. You got the 50-day moving average right there at 29.50 as well. And it kind of just, has that rounding bottom that we see in the marketplace where you have those V-shaped recoveries that sometimes can be difficult to really kind of, drill your timing here. But as the market is just kind of fading, coming down into this support level, you're starting to see a little bit of slowing momentum. And as you can see that slowing momentum in a variety of different ways, Tim. You can see it in the widths of the bodies here. So as you see these bodies picking up a little bit of steam on the sell-off, you start to see the bodies kind of condense a little bit, slow down. You can also see it in your wicks. And so as you can see, this wick to this wick to that wick to that wick, you see that slowing down and creating that U-shaped type scenario. Now you're in that neutrality from an intraday perspective. So you want to be aggressive on the buy side until a couple things happen. Either one, you see this intraday trend line I'm drawing to you, that is very, very consistent from a retracement perspective. So when you're dealing with when you're dealing with bullish retracements, you're going to have a couple things happen that really kind of trigger you back to that buy side mechanics. And number one, you're looking for these support levels intraday to kind of double bottom here as you did at 29.60, tested 29.50, that overall daily chart support level. And then you start to see it come right back up into that either vertical level of resistance, which you see on this very consistent intraday trend line, or perhaps a breakout of a horizontal level of resistance right here. So you're starting to see perhaps buying opportunities as we see, as perhaps we get some positive economic news or political news or Chinese trade war news, whatever the news is. Once you start breaking out of these, you could get a little bit more aggressive from a buy side perspective. It's not that volatile, to be honest with you, T. This is a really, really just kind of boring retracement in the market. It wasn't volatile at all, though. In the other index you're looking at very similar type price action here. If you drop it down into that 30-minute chart, which is the time frame I really kind of like here, you're starting to see that trend line develop the same way we're seeing on the S&P 500. You're starting to see that double bottom, which is actually much more consistent here on the Dow than it was on the S&P, kind of forming that double bottom from a technical perspective right there at 67,700. And now you're looking at that same type of perhaps buy side once you start breaking out. Now, I probably wouldn't touch it above the trend line, but maybe if it reclaimed above 27,000, we got a different discussion there. Looking at the NASDAQ, looking at a very similar type situation, a little bit more volatile in the NASDAQ, but you have that exact same type of intraday trend line. You have that double bottom that you saw right here at about 7,700. And then you had that one movement down on the S&P that you have that very similar on the NASDAQ. But what you're seeing here, Tim, across the board with the S&P, the Dow, and the NASDAQ, you're seeing the exact same technical conditions kind of play out here. The entire market is just waiting on some degree of news right here. The other index, obviously the Russell 2000 with the one we do cash flow condors on, looking at the daily chart, does have a deeper, stiffer retracement. There's no doubt about that, but it is slowing itself down right there at that same 50 period moving average, Tim. The retracement's deeper because the appreciation on the Russell, if you remember, was a little steeper on the climb. It's a little steeper on the drop here. Nice little doji hammer type inside candle, harami type candle, slowing its momentum at that 50-day moving average. Mm-hmm. I'm not looking to pick up the Russell directional. I never do that on the Russell, but I will tell you, you might want to sell bull put here.
I do like the bull put. I still like the condors. You know how I trade condors. I put them on every month. I mean, I just do it.
Well, and
It's a part of my system. Yeah.
if you're looking to leg into the condor, aren't you looking to leg into the condor at a support level?
Sure,
And
absolutely.
aren't you after a retracement?
Yep, absolutely.
Okay.
Yep.
So you don't technically need confirmation here, do you, on a condor?
No, not when you're 150, 200 points in cushion and you're doing low
You're playing
delta
zone defense,
65
right?
days out. Yeah, step system confirmation is for delta trading. And if you're doing short-term swing trading, for sure, you do need confirmation. But
Yep.
when I'm doing cash flow theta type strategies, confirmation is not a mandatory thing for me personally. So no, I would not need confirmation. I will tell you another area of the market, Matt, we rarely take a look at it though, that is looking pretty good to me is the European stock market as well. A couple of ETFs we can take a peek at. VGK would be one. EZU would be another one, and actually seeing some strength on the Euro FTSE 100. I saw that JP Morgan came out and upgraded Europe. They even said it's time to buy Europe instead of the US. I don't necessarily agree with that, and I still see.
No, do you agree or do you disagree? Don't give me the necessarily.
Do you want me to
get
go
off the
pull out
fence there?
27,000 quotes from JP Morgan that have been wrong historically?
I definitely disagree.
And they're wrong here too. Okay. At no point, okay, there's obviously you might take a stab and say, okay, it's undervalued and you think you might want to pick some up. But at any point in the last 30 years and at any point in the next 30 years that anybody says they would rather take a market over the US stock market, they're wrong. JP Morgan, Jamie Dimon, you're wrong. You're pushing funds and you know it.
Yeah. That is definitely what I'm feeling as well. I mean, Europe is going into a recession. They're just starting their economic problems.
I can't believe JP Morgan would say that.
Dude, it was some quant geek on JP Morgan that ran some model. Come on. JP Morgan's made up of a ton of different analysts. And so that was likely just one analyst who said something.
I hope Jamie fired that analyst the same way he fired anybody who was trading Bitcoin that one time.
Yeah.
But the reality of the situation, guys, it doesn't take long to say US over Europe. Europe's growing at effectively nothing right now. Germany's going into a recession. They're going to have to spit so much money at that problem just to keep them stagnation for the next 20 years. So if anybody wants to listen to that quant geek, that's a great drop, by the way, Mark, then go ahead. But yeah, BJQ or take the SPY.
Yeah, for sure.
I'll take the spiders.
Let's take a look at the dollar and then the commodity markets, Matt. Dollar obviously showing some strength here.
First of all, I have to apologize to quant geeks because I'm a quant geek myself. So it's not a disparaging remark on quant geeks. It was just that particular quant geek.
That reminded me of a Saturday Night Live clip from this past weekend with Woody Harrelson, who he's trying to describe something, but every time he describes it, he offends somebody else. And so he once he offends somebody, he always comes back and says, I'm so sorry for offending them.
I was just hoping it wasn't the Woody Harrelson skit where he was the football coach.
No,
I was just hoping that wasn't the one that reminded you of.
That was not the skit.
Okay,
no, it was not the football coach dating the 18-year-old. No, that was not the skit. But this offensive universe we live in, oh my God, they just drive me so crazy.
Matt, does it offend you when Linda in the chat points out that your team is going to get eliminated from fantasy football?
I laughed at it. I'm deeply hurt and offended by my student making fun of me for getting slaughtered in the tackle trading fantasy football league. Yes, it was me who got busted out of the league this weekend. I'd like to thank my team of horrible players for not stepping up and not supporting. And I'd like to thank Kirk Cousins for forgetting how to throw a football.
Yeah.
He forgot how to throw a football a while ago. So
yeah. Well, the Bears did lock him down and shut him down.
The Bears had 5 missing starters on defense.
It was a bad performance.
And they still were able to shut it down.
I'll tell you that. There's no doubt about it.
Yeah. But thank you, Linda, for pointing that out. I appreciate that.
What's the read on the dollar here, guys? Breaking out.
Dollar strong.
Strength. We going.
Dollar is strong.
Dollar strong right now.
I was actually.
It goes back to our conversation very quickly. It goes back to our conversation on Europe versus the U.S. Okay, dollar or the euro.
Pick dollar all day long.
Okay, so yeah, you're seeing a breakout. It's a fabulous breakout. It's a beautiful breakout. It's the best breakout of all time. Cody, give me your read on it, please.
I'm just laughing at the Trumpian doublespeak you had there.
Thank you.
It's the greatest breakout. It's the strongest, it's the best breakout in history we've ever seen.
Thank you. Thank you.
Honestly, my read on it is I was expecting a retracement back. So we had the breakout from last week. I was expecting when we got that doji on Friday to see a breakout retracement and then get a trigger after that. Now, instead, the dollar's just showing a continuation, and it's actually getting to a secondary trigger point as it's pushing through that old high of that wick of about 3 or 4 weeks ago. So right now, I want to see this thing close. If it gets a good close right where it is right now, I have no problem momentum trading.
I actually think the breakout is treasonous because it obviously doesn't.
Because it hurts U.S. revenues.
Because it hurts U.S. revenues. So the breakout is treasonous.
That's
all right, guys, bring it back in though. Dave in the chat. This breakout is huge.
I think from a technical perspective, isn't it most likely just a false breakout pay range up though here, Matt? I mean, we broke out like this before, and it pulled right back. I would not be.
It reminds me of this breakout.
Yep.
That's exactly what I was expecting. I was expecting it to pull back when we got that doji on Friday. Today's candle is actually a little bit like it is breaking out a second time, but I would not doubt if tomorrow we see a big down candle right back into support of 98.55, 98.65.
Yeah, I wouldn't be surprised either. You are absolutely range up. And for those of you who don't understand what Tim just asked me, what he's looking at is what's called potential average yield. And basically what potential average yield is, it's analyzing the historical support to historical resistance within its own trend. And so when you go from 96.70 up to 98.60, it moves about $1. When it goes from 97.20 to 99, it moves about $1.20. Or excuse me, that would be 97 to 99. That'd be about $1.80. Then it goes from 97.80 to 99.50 at the top. Yeah, you're absolutely range up. There's no doubt about that. And when you're range up going into perhaps a breakout, another way to look at it is RSI, but RSI on the index of the dollar doesn't really give you any type of triggers here.
And what's been more consistent on the dollar after it does its range up is the speed at which it pulls back down. So you look at both these previous pullbacks, there's 3 big red candles pulling it down. Just it's possible to get it right back into that support level. And I assume that trend line you already have drawn right around the 20 is where it'll come down to. And it'll be sitting right about 98.65 ish.
And you can see that trend line right on that weekly chart too. And so that trend line is definitely a very, very legit trend line, something I'm focusing on. But I would personally not chase the dollar up at the top end of the range. I mean, Tim, it's staring at that 100 mark.
Yeah.
It's just staring at it.
Yeah.
And it wants it, right? The traders want to push it there. But I would be a little surprised if we get there without some type of high base or some type of retracement. And if the dollar, it will do this up, and then it will give it all back in 3 days.
Sure.
Right. That's what the dollar's been doing. So it's you gotta kind of plug your nose and hold your breath a little bit, but you're looking to buy dips on the dollar.
Well, by the way, that's what I'm doing with my crude oil and natural gas bull puts is closing or plugging my nose and holding my breath a little bit here.
Dollar up. 55 doesn't break here, buddy.
Ding, 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 ding. I got to tell you, and I've got bull puts down deep out of the money on CL, and I've got bull puts deep out of the money on NG, and I'm watching the whole market here, Matt.
How deep are you? Are you 49, 48?
On the CL contracts, I am at the 46 is where
You're
I'm
at the 46.
At. Yes, but I'm in fact, let me get the exact ones. I'm even further in time than those 17 days though. So I'm 20.
I think I'm at a 48. I think that's right. I have to go check.
Man, I think I'm right there with you, about 48 on that 17 days out.
Yeah.
I'll tell you, I'm not too worried about it. You're showing a loss, obviously.
Yes, you are.
But I'm not
lost right now.
I'm not too worried about it. You got it. Like we talked about last week, you can't overreact to short-term price movements in credit spreads, Tim. And, obviously, that I'm telling our listeners that, but when you're looking at that, you have all this different support level that can really kind of maintain it. And Mark knows this is as well as anybody. Everybody's got his back. Putin's got his back from an oil perspective, right? Saudi Arabia's got his back.
Got his back.
Saudi's got his back from a price perspective. But Tim, if you look at
Putin actually doesn't have my back.
He doesn't have your back anymore?
No, Putin never had my back. Russia's always the wild card. They want to pump.
Oh, they're the
they want
Yeah, no,
go.
Putin. It's those princes.
Oh, why anybody would trust Putin in the first place is beyond me.
Yeah.
But you got a lot of neutrality here on the weekly perspective, Tim. $50 is still that significant whole number. I'm personally not overreacting to the short term, even though I do believe you're going to have more analysis as it hits 54 and 52.
Mark, what you reading on oil right now? I know you did the commodity report over the weekend. Give us a quick take.
It's trading in a broad range. It's trading in the middle of the range.
Yeah,
Like,
neutral.
ignore all that daily nonsense. Go to weekly charts, look at the broad range, and divide that. This is a really broad range right now. It's a really broad range.
For your 46 to be impacted in the next 17 days, T, you're going to have something massive geopolitical happen.
Sure. Yeah. But here's the thing about
short-term supply and demand is not going to have crude drop 18%.
Every time Tim selling naked puts or doing bull put spreads on crude oil makes me laugh, because I know he doesn't believe in oil, and I know he thinks oil can go down to like 12. So.
Yeah. Well, what about NG? I literally didn't take a trade on natural gas.
I haven't done it either yet.
No, I did. I did take this trade. And so I left it alone for a year. I watched the pullback. It came back and hit the moving average. And then literally it went down for the next 4 days in a row. So
that one, you got a little bit more risk here.
These are those type of trades that you feel like the market is literally picking on you.
Well, and I didn't make the trade.
We've all felt that before.
Reason is because I went on vacation and I just didn't do it.
See, I'm all about doing a naked put on natural gas, but there was a specific signal I was waiting for, didn't occur. Gap down a little bit, move down today. There's so much to teach on naked puts. I mean, you can't do it justice in just a few minutes, but you don't want, but the general principle is you don't want to catch a falling knife. You don't want to catch downward movement. Even if you believe and you really want to get in, wait for some kind of stability, because at a minimum, you're going to get a better credit. You're going to get a better credit.
I see the trigger here.
Oh, yeah, that's where I took it.
Yeah, I see the trigger there on a bull put. You're hitting rising 20. Obviously, we had unseasonably cold weather in San Diego, and that's kind of why it came down like that. But obviously, I'm kidding on that. I hope nobody actually thought that was analysis there. That was a joke on why natural gas moves, because I don't think anybody actually understands why natural gas moves the way it does. But
weather, right?
I'll tell you right now, if I get a little spin here this week, T, I'll sell a bull put here.
Matt,
I will never do naked puts on natural gas.
I can tell you why natural gas moves. Okay, it's controlled by the same people who are in charge of counting the oil inventories.
Mm-hmm.
That's why
natural gas moves on weather reports and inventory reports. It's supply and demand. It's not a mystery. It's just we don't have as good a news sources that are mainstream, that are screaming headlines on natural gas. But
so I need to be the 75-year-old man watching the Weather Channel if I'm going to trade natural gas.
I'm not afraid to be the 75-year-old man watching the Weather Channel to trade.
Are you literally watching the Weather Channel right now?
I'm going to in just 2 minutes. Turn it on.
We're
like, wow, it's warm down in the south. It's a little nippy here.
Forget natural gas.
It is a little nippy in Salt Lake.
Gold. Yeah. We're 35 minutes into the show and gold broke support. We haven't talked about it. Gold broke moving averages and support, and it's got a little bit of a head and shoulders type relationship. The pivots are ugly, Matt. The support at 1,500, that is a very, very clear violation. Are we heading to 1,400? Is this a one-day move?
If we were analyzing this last week, pretty in depth here last week, we were analyzing it. Obviously we all see the head and shoulders potential right there, no doubt about that. I said, we were asking last week if this little candle right here was perhaps a re-trigger. I said you could, but the better trigger's on the breakout, given the fact that we have a little bit of concern here. So obviously with the gold, with the dollar breaking out, this is now kind of inverted against dollar now. But now with gold, with the dollar breaking out and gold clipping this major support level right there at about 14.95 by 1,500. With some volume, guys, and that's the bigger concern I have on this short time, is that you do have a little bit of pickup on this volume, but if the dollar is going to do you think the dollar is going to break 100?
No, I don't. I think it'll hit its head and then come back, and that should give some relief.
In the most bullish condition, hold on. In the most bullish condition of the dollar that I've ever seen, the dollar screaming to 100, broke it initially, hit like 101, and then just got rocked back down.
Yeah.
And that's when the euro kind of came down to that 104 range. And, you know, it's so I don't foresee the dollar just going to pick up tremendous momentum here. I will tell you, though, it's concerning on gold on the short term, but I'm not concerned on gold on that weekly chart. I can tell you that right now. That weekly chart, which is the primary chart you should be fixating on gold, this weekly chart is still really, really good. Obviously, you got some, you know, you're picking up a little bit of momentum coming back down. But Mark, if you got a 1440 type level of old resistance over here and we get a pivot point, wouldn't that be a buy for you?
Okay, listen. You have two types of gold traders. One, people that believe in the fundamentals, the long-term cash flow, this.
Gold bugs.
Like myself. Not even gold bugs, but like people that just believe in the fundamentals. The fundamentals might change. Like if they change in 2021 or 2022 or 2020, whenever they change, and then you adjust.
Yeah.
You know, that's the camp I fall in. Then you have short-term traders that have tried to make a few bucks on the way up and it's going down today and they don't understand and they're frustrated and they don't have rules. I mean,
so they bought gold to make money.
They make money instead of investing cash flow.
Is that why we buy gold though? Is that why we buy gold?
Nobody that's ever listened to me, I do not directionally trade gold. I cash flow gold. It is part of my larger cash flow strategy.
You do cover calls, naked puts, boomerangs.
In the commodities report this weekend, I said, listen, this support level, this short-term support level is very easy to identify. Very easy to identify for the individuals cash flowing. Now, if you're just trying to make a buck, the second that breaks, get out. But for cash flow individuals, it says you have to have a plan. If the support level breaks, what is your plan? Rolling down calls in the money. What is your defensive action? You know, so whatever your defensive action was, and it's going to be different for different individuals. Some people buy puts, some people roll down calls aggressively. Whatever that is, you need to be prepared because everybody sees the support level. It's a clear technical, and we don't, even though we love our fundamentals on gold, we don't ignore our knowledge of technical analysis. That would be insane. Like, wow, huge support level breaks, and then we have to have a plan. What is our defensive plan of action? Mm-hmm. And individuals that do that, they clean up on gold. Mm-hmm. But if you had naked puts sold underneath this support level, if you had naked puts sold under this support level, you need to ask yourself, did you plan on taking delivery? If so, fine. Proceed with that plan. If you didn't plan on taking delivery, then you should have got out when that support level broke. It's that simple.
I agree. You know, one of the ways I like to play gold with cash flow though, Mark, is the poor boy covered call, the leap covered call, because leaps are generally so cheap. And so what I have to do, and this is covered call mechanics, all part of the Tackle 25, is roll those calls down. So there's a lot more to it with that, with the way I personally trade it. But I love the naked put. I love the cash flow on gold, and I'm with you.
Yeah, whatever it is, whatever the cash flow strategy is, support breaks. What's your defensive action?
If anybody's freaking out over the first breaking of support on a daily chart in the last 6 months after 25% price appreciation, what are we doing? Seriously?
No, I mean, the only time anybody would ever freak out over any short-term movement is if they're over leveraged, over position sized, or they don't have context to their system.
I am so excited.
If all of those things occur, they're not a trader, Tim.
I know. And we're veterans and we get it, you know? And so, and here's the thing about gold. It broke support in the short term. It's weak. The dollar is strong. You got to have a plan. I love what you said, Mark. You have to have a trading plan. And Matt, you're right. You know, what are we doing here? What is the plan for any product that you're going to trade in the market?
Well, I'll tell you, my plan is to wait for this bullish retracement on the weekly chart to settle down and go aggressive on the buy side. That's my plan.
I like
and if you're buying gold because you want to make a quick buck in a swing trade, you're trading gold completely inaccurately. You buy gold as a protection strategy. You buy gold as a protection against recessions. You buy gold as a protection against inflation. You buy gold as a protection against currency. You do not buy gold to acquire more currency.
I mean, you think about it. I mean, the only reason gold's really breaking down right now is because the dollar is so ridiculously strong. But if you think about how well, because the dollar's been strong for a while.
Yeah.
How well has gold done despite a strong dollar? That shows you how insane the fundamentals behind gold are right now.
Well, and Mark, we talk about momentum a lot in technical analysis. Look at the momentum in this trend. Okay. You got wave 1, wave 2, wave 3, wave 4. And Tim, I know you don't love the Fibonacci Elliott wave, but this is a pure Fibonacci driven market right now. It's an Elliott wave Fibonacci driven market right now on gold. You have wave 1, wave 2, wave 3, wave 4. And when you're dealing with the waves on your wave counts, guys, and you're looking at drawing your first pivot on your wave 1 back down to your second pivot, well, where do you come into? You come into 161. You came into, you were overextended on that trend. Eventually, there's going to be profit taking, and that's what's happening, in my opinion. Did I want that daily support level to break? Heavens no, I didn't want that daily level of support to break. But what's my plan? Wait for it to retrace back down into support. And where's that support level going to form at? Well, let's see where that support's going to form at. I'm going to give Tim his daily dose of Fibonacci here.
Oh, I love it. He needs to eat his vegetables. Okay.
Right here at 1450 is your 38% retracement. Right here at 1417 is your 50, and right here at 61.8 is your 1381. This could retrace much deeper and still be a consistent bullish uptrend, Tim.
Matt's just picking on me because the Bears defense held Kirk Cousins to 0 touchdowns, and he's out of the fantasy football league because of it. So it's okay. It's okay.
My analysis was good. Your analysis was dumb.
Listen,
to sum everything up, if you are trading gold for a quick buck, you need to have a better plan. If you're trading it as you should be long-term with cash flow, then you should be excited that it's about to give you another opportunity to get in.
That's the thing.
I'm looking at 1450.
I'm excited. I am super excited at, once again, just like natural gas, you don't buy it on the bearish signal. What signal is being produced today? A bearish signal.
Bearish signal.
You wait for that stabilization pattern to form, that reversal pattern, and then you jump.
Bitcoin's been getting crushed lately. We can look at it another time, but it's down below 8K again for the first time. Actually back up above it, 8,300, trying to hold that $8,000 level, Matt. It's been under pressure. Dollar up, it's been going down, kind of in a bearish trend in the short term, no doubt about it. A lot of stocks I want to talk about in the news here today, Matt. Apple Computer might be the first one. It was on our option report, and we talked about a potential breakout. Came out, they had a price target raised by one of their key analysts. It's showing a strength here. Beautiful looking chart. What are you seeing?
If Apple breaks and runs, it could carry the market.
Yep.
I mean, that's how important Apple is to the marketplace. It's one of those stocks like Microsoft, Apple, Google, Facebook. I mean, Kramer nicknamed them the Fangs many years ago, right? And that was one of Kramer's biggest hits, I would say. Wouldn't you agree?
Yeah.
Is when he categorized Facebook, Apple, Amazon,
absolutely.
Netflix. I mean, sometimes we make
but
fun
actually
of Kramer,
Apple was not part of the Fang.
Amazon was, right? But then everybody just started lumping Apple into it. Like it was FANG at first, and then it came FAANG, and then it's like, where's Microsoft here, right?
Yeah, became Fangum.
But yeah,
Kramer started
Kramer's
it,
just
and then
Facebook, Amazon, Netflix,
and then the trading community said, well, we're going to make that our own. Thanks for the idea.
But yeah, give Kramer a lot of credit because guys, those Fang stocks after he did that, I mean, they led the market for like 4 or 5 consecutive years. So Apple certainly has that ability here. Obviously triggering here today on some positive news with the price target raised here. Looking at it from a weekly chart here on Apple, guys, you're seeing a little bit of overextended behavior, but you're coming into that all-time high. You're only a few points underneath that all-time high on Apple. Looking at the weekly here, little bit of a high base type situation on the weekly chart. If that does clear out of that 226.50 level, all-time highs are the most likely destination at 233.
And all they needed to do is 3 cameras. We're going to get down the road. They're going to be 8 cameras on a phone.
That's it. That's all they needed.
A lot of good
Keep adding cameras.
Okay. A lot of good candidates on the bull and bear list, Matt. I'll bring up one more, Tilray, on the bear side of it. Marijuana companies have been taking it on the chin. We've been talking about it. This was on the bearish option report this week as well. And by the way, if you're a pro member at Tackle Trading, you already know the value of what those reports bring. They give you candidates each and every week. Tilray pressing support here down again, Matt, 3.8%. Just really, really bearish.
Can I chime in as the toxicologist here?
Yeah.
A lot of what's also happening in the cannabis sectors is as they've been researching the vaping products, they're noticing one of the greatest trend pattern is upwards of 70% of the patients that are seeing these health effects of it weren't just doing the normal vape products. They were actually getting the THC infused products. So from that, we're seeing a lot of these cannabis companies kind of take a hit because it's showing that it may not be this overall safe thing. There's a health risk in there between the THC, the vaping, and mixing the two, as well as black market products and a lot of things like that.
There's a lot of health risk in smoking cigarettes, and there's a lot of health risk in buying liquor, but people still do it.
Exactly. But that's one of the reasons that this is taking a...
Well, that and they're overvalued completely.
Well, they've always been overvalued since we first laughed at them when they spiked and bubbled.
Oh, and by the way, I remember making the joke. They're a 20 billion market cap company. I was talking about Tilray. I think they were like $100 at the time, right? And I said they're a 20 billion market cap company that has $20 million in net revenue. That doesn't add up, right? And I want to ask you guys a question. I'm going to put you on the spot. 2017, you had the metric rise of Bitcoin, followed by 2018, the colossal crash, right? 2018, all the people that lost all the money in Bitcoin, what'd they go buy? They went and bought pot stocks, right? And then they lost all their money in pot stocks. What's that next fad? Are we in it with the Beyond Meat? Are we in it with the?
That could be it, but I see more legs behind plant-based products than I do Bitcoin.
Oh, I 100%.
Well, the valuation on Beyond Meat is still terrible.
It's still terrible, right? I mean, it's just what is that next wave? Is
anybody going to be shocked to see Beyond Meat at $30 sometime next year?
No, not at all.
By the way, even Tilray here, Matt, you were talking about that last year. They made $43 million. They're still valued at $2.6 billion.
Yeah, they're still overvalued.
People look at the chart and they say, well, it's gone down. It's gone down. It's gone down. It's got to go back up. It must be cheap. It's still an extremely overvalued company at $24.87 a share. And that's one of the things about fundamental and technical analysis. The chart is showing you what Wall Street thinks of it. What the next fad is, that's interesting. I'm not sure. Maybe cybersecurity companies, they've come and gone. Could be a product like vegan-based products. You bet. Those absolutely could be there. Who knows? Maybe these space stocks are all going to kick off. I saw.
You think Elon's going to go to Mars next year?
Elon wants to go to Mars. Yeah, I don't know. Usually the charts will tell you though. But that's a good question. I don't know. What does the audience think? I mean,
I don't know who lies more: Trump about the Chinese trade war, or Elon Musk about what he's doing with Tesla.
Yeah,
I mean, it's an absolute joke what Elon's doing. But good luck. Just good luck. I hope he does go to Mars. Good. I hope he's successful with it.
Well, he didn't say he's going, did he? He just has a plan.
Oh, no.
He's going. He's just sending his ship to go.
Are we sure?
I don't know.
Well,
I don't know.
Prove it out. Be the first man.
Sure.
We'll make movies about you.
Sure. And last thing I want to do here real quick, Matt, we used to actually run through every sector on Mondays. We're not going to do that anymore. But what we want to do is just kind of say, hey, what sectors are grabbing your attention here today? Matt, are there any of them particularly that grabbed your eye?
Yeah, I'm looking at a couple sectors here. Obviously utilities is just very, very, very strong. You are overextended in utilities in its trend. And it's not very often you analyze utilities the same way from a technical perspective you would analyze a technology company. But you're seeing a very consistent trend here. You're starting to get to the top end of the range. I'm looking for more like just a fade action, maybe a little bit of a flag-based retracement here on utilities. You are forming a pretty clear breakout channel right there at about $65 as you've kind of hit your head on that level over the course of the last couple trading days, Tim. So as you can see this, as the price appreciation is happening here, you see that double top there right around 65, which would be a good breakout on utilities. But it does have a little bit of an overextended. The one sector I'm looking at is another defensive sector here today. It's a sector that's been very, very consistent over the course of the last, really since all of 2019. And now you're showing really good price appreciation, a little bit of uptick in volume as the market's coming up. And now you're threatening that breakout here on consumer staples. So I'm really kind of looking at some consumer staple stocks.
Yeah, for sure. Walmart about near an all-time high. Procter & Gamble, Coca-Cola, Pepsi has earnings this week. Costco looking good. There's a lot of good ones in this space.
Outside, like remember that one day a couple of weeks ago where you had that one day really kind of drive down on a lot of these stocks, and we all kind of felt like it was a little bit of an overreaction to it.
Sure.
Well, you're at a point now where we're going to see if it really was an overreaction, Tim. And so that's kind of what I'm focused on here. But I'm also kind of what Mark talked about. I'm staying away from companies that have Chinese trade war risk, right? And McDonald's doesn't really have that, at all.
Yeah.
So I'm kind of looking at those types of stocks here, but I do think there's a very important.
They got risk of losing my business if they don't get that damn McRib out soon.
Mark, we got to find him some McRibs and get him like a lifetime supply of frozen. Oh no, he would not accept that. He would not accept it. He wants the dirty.
I want the little onions and the pickle.
Dirty McDonald's version of it. He does. He just wants it. But I do think it's going to be important this week to keep an eye on some of these stocks that did get hit a few weeks ago on that one-day movement here. So I'm looking at that as well.
Yeah. We will break it down each and every day as we go through the week here. Mark, what do we got at Tackle Trading this week? Obviously, always the regular stuff. Onboarding tonight. We got a webinar for beginners. Tomorrow, the coaches show. What do we got to promote here at Tackle?
And then we got the Tackle 25 on Wednesday, going over cash flow stocks. And Cash Flow Club on Thursday. Got a podcast coming out. We're going to talk about the Poor Boys Covered Call. So the linear order of things we're doing at Tackle Trading this week is we're releasing a podcast. If you're new or want to know about Tackle Trading, we do an onboarding class every Monday night at 6:30. And then we got our coaches show tomorrow night. And I don't want to get too far in advance, Tim, because my brain can only hold so much. That's enough to keep you safe. Hey, and if you want to learn about portfolio building a portfolio, I've started a portfolio series on the Commodities report. Series, like constructing a portfolio on the Commodities report. Great time. If you are like, I don't have any idea what percent to allocate here or there or wherever, it's going to be a nice little series. I'm really enjoying writing it. Sign up for a trial. Email me at Team at Tackle Trading. Commodities report, part 1, building a portfolio this week. And Tim is holding up. I want to keep talking to see how long he'll hold up that book.
I'll hold it until you're done talking, and then I'll just give everybody one last reminder.
I can filibuster forever.
I know. I understand. Last chance to read the book, guys. We're doing the book club podcast next week. So Aftermath by James Rickards, pick it up, Audible it, get ready for that. We're going to have a fun conversation next Monday on that. It is International Podcast Day, Matt, and we've got our Trading Justice podcast.
Stay for everything.
As a podcaster, that makes me disgusted.
Matt, you enjoy the international holidays. Enjoy it.
You can't force this on me. It's not going to happen. I am never going to embrace the fact that we have to celebrate some random percentage in the marketplace every single day. And I know everybody has a podcast these days. I get that, but I am so sick and tired. And maybe this is me acting like the old man, Mark, but I am so sick and tired that we have to celebrate some portion every single day because it minimizes those very important days in the world. You just
guarantee that every day that you're on the halftime report, I come share what international day it is.
Listen, and unless it's Martin Luther King Jr. Day, I don't care.
Yeah. Not Christmas, not Thanksgiving, not the regular holidays.
Oh no, the regular ones.
We won't be open on those days.
Yeah, the regular. Yeah, he can't get me on those days.
If the market's closed, then we're closed.
Yeah, if the market's closed, those are days we celebrate.
Go watch the newsletter. Go watch your reports, guys. Always do your work on Mondays as you're getting ready for the week. Random twin
sister celebrating random Friday of this random month. No, I'm out.
C'est la vie. We're out. All right. We're going to go podcast, guys. We'll put that out on the site here soon. We'll see everybody tomorrow on the halftime report here on YouTube.